So why is Phoenix so unaffordable? Phoenix, once known for its affordable living, has seen a dramatic rise in housing costs over the past decade. The city, part of the rapidly expanding Sunbelt region, has attracted new residents at an unprecedented rate due to its booming economy, appealing climate, and relatively lower taxes. However, as Phoenix becomes more popular, the factors that once made it affordable are slipping away. In this video, we're going to explore why Phoenix has become so unaffordable, what's driving up the surge in costs, and whether there's any hope for future affordability. Number 1. Supply and demand imbalance. The primary reason Phoenix has become unaffordable is a sharp imbalance between housing supply and demand. Over the past several years, people have flocked to Phoenix in search of a lower cost of living compared to cities like Los Angeles and San Francisco. However, the region's housing development hasn't kept pace with the surge in demand. The influx of new residents has strained the existing housing stock, pushing prices higher for both renters and buyers. The main problem we are experiencing is where buyers are coming from. If they are coming from less affordable cities, prices would be less. Key factors influencing supply and demand. Increased migration. Many people moved to Phoenix during the pandemic as remote work allowed them to relocate to a more affordable city. This migration, especially from high-cost states like California, drove up demand. Slowed construction. The housing construction industry has struggled to keep up with the demand due to rising material costs, labor shortages, and delays in permitting. This has resulted in fewer new homes on the market, further exacerbating the supply shortage. We expect rents to continue to drop until 2028. The current rental units near completion will be on the market soon, causing an oversupply of rental housing. This will cool the seller's market, as if bringing down the demand for homes, as some people will rent in lieu of buying. Number 2, rising housing costs. Phoenix housing market has experienced a rapid appreciation, making it unaffordable for many long-term residents. Between 2020 and 2022, the average home price in Phoenix rose by nearly 30%. This sharp increase was driven by a combination of higher demand, low mortgage rates, and a competitive buying market, which included institutional investors snapping up properties. Current market trends. The high mortgage rates, with the Federal Reserve increasing rates to combat inflation, mortgage rates have risen significantly. This has made it more expensive for home buyers to afford the same house they could have purchased a few years ago, pushing many out of the market. Increased investor activity. Investors, including institutional buyers, have purchased large numbers of homes, single-family homes, to turn into rentals. This has contributed to the rising home prices and made it harder for everyday buyers to compete. Number 3, skyrocketing rental prices. In addition to rising home prices, rent in Phoenix has surged over the past few years. This increase in rental costs is due to a combination of high demand for housing, limited supply, and the rising cost of maintaining and managing a property. In many parts of Phoenix, rental prices have increased over 20% since 2021, making it difficult for many residents to afford housing. Rental market challenges. Demand for rental units. As many people are priced out of home ownership due to the rising mortgage rates, they turn to renting, which further increases demand for rental properties. This increased demand drives up the rental prices. Institutional investors. With more institutional investors owning rental properties, the goal is profit maximization, often leading to higher rents than traditional mom-and-pop landlords. Number 4, wage stagnation and rising costs. One of the most pressing issues facing Phoenix residents is the gap between wage growth and the rising costs of living. While housing and rent prices have surged, wages in Phoenix have not kept the same pace. Incomes that were once sufficient to live comfortably now barely cover essentials in many areas of the cities. Is $100,000 a good salary in Phoenix? While a $100,000 salary was considered very good income in Phoenix just a few years ago, it's now only marginally above middle-class range due to the high cost of housing. In certain neighborhoods, especially in Scottsdale and Paradise Valley, even a $100,000 salary might not be enough to afford a median-priced home. Middle-class salaries. According to recent estimates, the middle class salary range in Phoenix is roughly between $48,000 and $144,000 per year. While this income level was once considered solid middle class, rising costs are pushing many families out of the city's more desirable neighborhoods. Number 5. Inflation and cost of living. Beyond housing, inflation has impacted the cost of living in Phoenix in many ways, including groceries, transportation, and utilities. Energy costs in particular have increased as residents use more air conditioning to cope with the extreme heat. With inflation remaining high, these rising expenses will make it even harder for people to manage their budgets. Number 6. Will Phoenix ever be affordable again? While there's hope that Phoenix could see more affordability in the future, but it's unlikely to return to the affordability levels of a decade ago. Some factors that it could improve affordability include increased housing supply. If developers can ramp up construction to meet demand, increased housing supply could help stabilize home prices and rents. Arizona state government is also pushing for more housing construction to help alleviate the shortages. Market corrections. As the market stabilizes and interest rates potentially drop in the future, home prices may plateau or even decrease slightly, which could help make the market more affordable for more buyers. However, given a high demand for Phoenix real estate, any decrease in prices is likely to be modest. In conclusion, Phoenix's rapid growth has transformed from an affordable city to one of the more expensive places to live in the Southwest. The sharp rise in housing costs driven by increased demand, low supply, investor activity have made it unaffordable for many residents. While wages have increased, they have not kept up with the cost of living, and rising mortgage rates and rent prices are putting even more pressure on the residents. The question of whether Phoenix will ever be affordable again depends on several factors, including market stabilization, increased housing supply, and the broader economic climate. For now, Phoenix remains a vibrant, attractive city, but one that comes with a much higher price tag than it did a few years ago. I guess it all depends on where you're coming from.